When you're raising money and the laws are like, let's put a tape over your mouth, how's that gonna help? You gotta just step on the gas and just go for 30 days and close it out. There are different methods to raise capital, but that at the end of the day is not going to solve all the problems for you. You can get lucky once, it's not gonna happen consistently.
Most founders build businesses that fit a trend. Stella Han built a business that fills a gap. After seeing firsthand how hard it is for small operators, creators, and real estate entrepreneurs to raise capital, the legal hurdles, the compliance work, the expensive lawyers, the messy onboarding, Stella co-founded a company designed to fix the problem. She's building a platform that makes raising capital simple, compliant, and actually accessible for everyday operators, not just big syndicators or institutional players. Her mission is clear. Democratize capital raising so more people can build wealth, especially women, creators, and first-time entrepreneurs. Her company is bridging the gap between people with deals, people with an audience, and people who want to invest, turning what used to be a painful, expensive fundraising process into something modern, streamlined, and social. In this episode, we dive into the massive gap Stella discovered in capital raising, how her platform empowers operators to raise more money easily, and why the fundraising world is outdated and what she's building to fix it. The future of raising capital for small operators and creators, and the mindset it takes for a woman founder to disrupt a very old industry. This is the capital raising blueprint for the next generation of entrepreneurs. Stella, welcome to the show. Thanks for coming in.
Thanks for having me.
Yeah, excited that we had our boardroom mastermind right 5 minutes down from my studio, so I could capture you when you're in town, and excited for this podcast.
Yeah, seriously. We're going to be doing a lot of fun discussions and just fire away.
Yeah, you got. All right, first question. So you're building a company that solves a massive pain point in capital raising. What was the moment you realized that this gap existed and that you were the one to fix it?
Yeah, well, I went through massive pain myself raising capital. So first time I needed to raise $1 million to buy a portfolio of duplexes, and I had no clue what I was doing whatsoever. Ask all my friends. Obviously, there's a lot of legal and compliance with capital raising, and I definitely did not want to go to jail for that. So everyone's like, well, you either do a syndication or a fund. And with that, found a securities attorney, paid them 30 grand without having even raised a single dollar. That was just so much to me. And we ended up spending 4 weeks creating this 100-page private placement memorandum, which I can barely say. It's honestly like a tongue twister in itself. And I got the stock back. I really had no clue what was in it, let alone my investors. And, we ended up creating a 506B, and, half of my network couldn't even invest because there's this cap of 35 unaccredited regular investors. And most of my family and friends are just normal human beings, right? And, because the whole process took so long, I had 2 weeks left before my close of escrow. And, this is my first time raising money, right? So you could just imagine just what an absolute shit show that was. Like, I honestly still have PTSD reliving that moment. And I was, just begging people over text, all sorts of crazy things. And, I couldn't pull it off. I, could not raise the $1 million. It was just impossible, and ended up losing 55 grand on that deal. That, 30 grand to the lawyer and then 25K EMD, and seller was just done with me, right? It's not their problem that I couldn't raise the money. And I just felt so burned. And at the same time, outside of real estate, I come from tech. I worked as a software engineer in a lot of different fintech companies, and a lot of my friends and I, we're very savvy when it comes to investing outside of real estate. We would go invest in stocks, crypto, what we think is, the next billion-dollar unicorn startups, right? And we would pool a lot of our money together into something called an investment club, which, did not require any of us to go get a crazy securities attorney and deal with any of that crap. And that's really when I decided, I can't just sit in my failure. I've been on the other side where I know it's possible to raise money without all the red tape, without all the expensive chaos and all of that. And to me, that was, truly a calling where it's like, I am the person that has a contrarian insight. And if I can really lean into this, I can create a completely game-changing way for people to raise capital in the real estate space.
Yeah, it's kind of like you got the perfect background, software engineer and an investor that loves investing and wants to do that. So now if you put those two together, boom, Fractional app is born, right?
Yeah.
Before your platform existed, what did the capital raising process look like for small operators like myself, and why was it so broken?
Yeah, I mean, honestly, there was not really a good approach, right? Because with traditional capital raising, pretty much the options are doing a syndication or a fund, right? A lot of what I experience. And there are two different setups. 506B is one of them, and then there's also 506C. So with a 506C, what's really great about it is you could do any sort of, public marketing, all of that is great. But what's really bad is that it's for accredited investors only. So if you're a smaller operator, your network is not going to be, super rich people, institutional money. Like, that's just not the people that you know, right? And then the other option would be a 506B, which does, allow 35 unaccredited investors, but there's no marketing whatsoever, right? Like, you're not allowed to go on Facebook and post about it. You can't, scream from the top of a mountain, right? And that really sucks, because when you're raising money and, the laws are like, let's put a tape over your mouth, how's that gonna help, right? That's just such backwards thinking. So I really think, with the traditional method, it really makes it so much harder for someone that is starting out to really leverage their network, build their brand while being able to raise the capital at the same time. And it really is just such a brutal process.
I agree. I mean, so I've done 506B and 506Cs, and they're very different. And I have, like, both of those people are in my network, right? And what I think listeners should really understand is that a 506C sounds great because you can advertise Instagram, YouTube. You can tell anybody about it. A big catch of that is you don't have to have a prior relationship. So I can meet someone at a meetup or a restaurant, say, hey, what do you do? Hey, I raise capital. We build commercial buildings. Warehouses is what we do specifically right now. Would you like to invest with it? You can have those conversations. Those are legal. But if it's a 506B even, you have to have a pre-existing relationship, meaning you can't pitch them anything on the first meeting. You have to actually have some established communications. And oftentimes I know people that have the SEC has come after and they want to see a log. Not just, I met Johnny 3 months ago and then we had a couple phone calls. They will ask you for those phone records.
Yeah.
So I've done both, and my current attorneys that are big attorneys, they're very conservative, which is great. It means I won't ever go to jail, hopefully, right? But because I did a 506B first and a 506C second, they're now advising, saying you cannot go back to a 506B, because if someone had found me on LinkedIn, Instagram, YouTube, wherever all my marketing goes, if they saw my company or market there, then came to me, they found me through marketing, which is illegal for a 506B. So depending on who your attorney is, and if they're not advising of you that, there's risk there. So I encourage any listener, if you started with a 506B or you started with a 506C, you cannot go backwards, at least when it comes to syndications. Yeah. And I would believe that might be true for a fund. So if I went to go start a fund, I'd have to start a 506C. And as we talked about, or as we're talking about, anyone that is not accredited, making less than $200,000 per year or $1 million net worth, not counting your primary residence. And if you're married, then it's $300,000. And I just want to add one point that I thought was really unique and that wasn't clear when you read that description. If people are married and one spouse isn't working, you don't have to make up to $300,000 per year just because you're married. It actually can be the solo income earner qualifying by themselves, even though they're married, at $200,000. So that one thing opened up a couple doors on my last investment for me. But what I love about Fractional app, which we'll dive into more, is that you can advertise and you can bring in people for any amount of money. And what is the restriction? Is it 100 people or less in that club for that deal?
99 people is the maximum you can have in an investment club.
There you go. So every great business solves a pain problem. What's the number one pain that your company solves for founders that they feel immediately?
Yeah, I mean, I think, when people are raising capital, right, it is a time and money problem all the time, right? You are basically usually pressed against the clock where you've got a deal, you've got to find the money, and the closing is fast approaching, right? You don't got 4 weeks to waste getting paperwork done if your closing is in 6 weeks, right? So with an investment club, what we allow people to do is create one within 5 minutes, right? That is an exponential just decrease in the amount of setup that it takes. And then the second is really around just flexibility and access, right? As we talked about with the traditional methods of a syndication or fund, you are restricted in how you can market. You are restricted in who you can raise money from. That doesn't exist in an investment club. So what's really interesting is, in the eyes of the SEC, the reason why they regulate capital raising is because you are effectively, controlling the destiny of how someone's money is going to work, right? And they obviously want to protect the investors who, don't get decision-making opportunities, are basically just handing you their money, and then you are solely determining the outcome, right? So SEC has this thing called an Howey test, which is how they evaluate whether something is a security or not. So essentially, something becomes a security if you are giving a person money with the thought and expectation that they're going to make you profits without you doing anything, right? And an investment club, the SEC actually says is not a security, which is why they don't regulate it. And what's really interesting about that is because there is active participation. So it's not, under the efforts of others. And how it works is, let's say Curt, for example, you say, I want to go buy commercial properties. This is my buy box. Who wants to do it with me, right? I'm taking any investor that's got 25K, right? Now you can start pooling money. You can talk about it with people, from social media, people you're meeting at different networking events. It could be anything, right? And anyone who is a believer in that idea and a believer of you, they are going to join your club. That's how the money is pooled and raised. And where it becomes different is you now, as the leader of the club, you would find opportunities that fit this buy box, bring it back to the club, and then everyone gets to vote and say, yes, Curt, we love this deal. We agree it fits the buy box and the reason why we formed this club. We vote to approve to deploy our money. That's all of your investors taking on the role of doing due diligence, underwriting, and actually actively participating, right, in deciding how the outcome of their club is going to go.
So what makes, that's a great explanation on the platform itself. We'll dive a little bit deeper, but what makes your platform fundamentally different from the traditional syndication, PPMs, which are private placements, or old school raising capital?
The fundamental difference is that it's not a security, right? So because it's not a security, none of those restrictions apply. None of the red tape applies. So you don't even need a PPM. You don't need to set up a 506B or C, right? That's why we're able to create a club just within 5 minutes, and you can tell everyone about what you're doing and include any single investor, right? Accredited, unaccredited, doesn't matter. They can all join your club.
That's great. And what's the hardest part of building the product? The tech, the compliance, psychology of investors, or educating operators?
Man, I think every aspect of that is challenging. Definitely, initially, it was the compliance, right? Because that is the trickiest thing when it comes to the capital raising and the most important, right? We obviously don't want anyone to go to jail for raising capital the wrong way. So we actually brought in the former senior counsel of the SEC as our legal counsel. So we made sure that, we're designing the company, the platform in a way where, as you said, right, like if the SEC ever came knocking and they wanted proof of how people were actively participating, we built the platform in a way where we're tracking and logging all the decisions people are making together. So that was, the first crucial piece of the puzzle in putting all of this together is how do we make sure we are, crystal clean, right, from a compliance perspective on how investment clubs are being ran on the platform. And then from there, it really is a lot of education, right? Because operators in the space, they've been taught for decades, right, that syndications and funds are the only way to go when it comes to raising capital. So we are doing a lot of awareness on, if you're an operator that believes in the magic of a community, you want people to have a seat at the table and really, build better trust, right, with your investors, there is an alternative that will help you unlock more dollars, will help you raise capital faster, and will help you build your personal brand as well.
And I mean, myself, as you're right, we are trained by legal team, other investors. We have our network. How hard is it to educate and convince operators that, hey, this is actually a legal way to raise capital? What are some of the hurdles you think that are toughest to get over when talking to operators specifically? Like myself, I guess, right?
Yeah, I think it is really, word of mouth is so big, right? When you hear about an investment club for the first time, I would say people are skeptical, right? Because they've never heard of it before. They're like, did you make up this word? Like, what exactly is this? So we've had to, pretty much in almost every single conversation, actually pull up the SEC website and show people, look, I didn't make up this term. This is a real thing. And this is the SEC stance on what investment clubs are and why they do not see it as a security, which is why they don't regulate it. And then people are like, oh, this is real. Okay, tell me more. And, now we've been able to build a lot of credibility where, some of the top industry leaders like, Pace Morby, Brand Brittingham, Investor Girl Brit, right? They've been using Fractional and launching their own investment clubs and, really seeing their community of investors jump into the clubs and grow with them. And, once the operators start hearing these names and how they've, all these leaders have been able to really leverage this concept and grow exponentially, that really gets their heads turning and really strategizing around how this can really fit into their plan of raising capital.
Yeah, and I think it's a good strategy for marketing as well for your company. Number one, like pulling up the SEC app during a conversation or Zoom call, that's just credibility right there. It's not, hey, I'm making stuff up, let me prove it, right? And that's like anything in any business. As a real estate investor myself or developer, investors, their top question is like, how many investors do you have that continually invest with you? And then what kind of updates can they expect? So I usually show them a past update from a last deal, add them to just a monthly newsletter. That way they're not getting too much spam. But when I allow someone that's like, hey, I'm ready to invest like in your next deal, but I want to see what kind of updates I can expect. When I send them, hey, I'll send you last month's update that I already sent out. Usually it wins them over because I personally do not outsource that. It's a prime piece of my business. And it sounds like it's something that you're taking very seriously too. Also, you hired a consultant, the former SEC counsel. I mean, I don't think you could get any bigger counsel than that specifically for what you're doing.
Yeah, absolutely. That is the app, the biggest chess piece that we play in the conversation is, look, compliance is equally important to both of us. That's why we literally have the guy at the SEC who wrote all the rules on how this works. And he is standing behind our company and making sure that everyone does this right.
Yeah, it's very smart. It protects, like you said, it protects operators, protects your company, and also protects investors as well. What was the hardest part of building the product? The tech, compliance? Actually, sorry, we just talked about that one. I'll just remove that out. What surprised you the most about what founders needed help with when raising capital?
That's a great question. I think people don't understand that capital raising is a skill and a relationship that is developed over time. I think a lot of people approach it almost too reactively instead of proactive, right? People don't, I've worked with so many operators where they don't even have an investor list that they're, adding into, building relationships with people. And then it's like, okay, I got a deal. I have to raise $1 million by next month. Time to raise capital. And that to me is like, you're already 6 months behind, right? Like you should be constantly raising capital, right? You're raising capital before you're even raising capital. And I think that is the biggest struggle that people deal with, is they don't understand that, similar to a sale, right? You are basically constantly selling, and capital raising is almost like a funnel where you have to build a rapport, you have to build a trust, you're maintaining all those relationships. And then it's like, hey, I found this opportunity. And by then you would have been already delivering so much value to that investor for months ahead of time, where they're just already excited and they're like, I'm in for this amount, right? Instead of, okay, I got the deal, I'm raising capital, now I'm begging people to, put in their money with me. So that is really what I constantly have to push people to think about is, there are different methods to raise capital, but that at the end of the day is not going to solve all the problems for you, right? You have to come with the network, you have to come with the investors, and then you plug in to the right legal structure to put it all together.
Hope you're enjoying this week's episode of the podcast. If you're into real estate investing and want to consider partnering with Captain Capital, go to our website, captaincapital.com/invest, fill out the simple form, and let's book a call with the team. Now, back to the show. Yeah, you make a great point. Raising capital is all about building relationships long term. You have to gain credibility, especially if you haven't done a deal. You were raising $1 million on your first deal. That's a big raise. I've failed on a raise myself, but it was a weird situation. We were pressed to raise at the end, right? And we probably could have pulled it off, but at the same exact time, the banks were changing interest rates, which made the deal not look as sexy. So in April of this year, we were supposed to close on another development. We had most of the money in investor capital in the bank, and we could have pulled off closing on the land, right? But I made the decision, because of bank rates, we were getting quoted 8.5%, and it went up to 11.5%, and banks were starting to turn us down. Now, when you're talking about $8 million project, that extra 3% and uncertainty really changed the returns. And it just wasn't sexy enough. So I said, you know what? We lost $45,000 on that deal with legal docs, EMD, engineering, things like that. And it's not a fun pill to swallow. You did it, and money doesn't come that easy, but we decided to return investor capital. I was a little nervous writing the letter to say, hey, here we go. Here comes an email that I didn't say we failed, but I said, hey, my number one job is to protect your money. Mm-hmm. That was it. The bank terms, I didn't say, hey, capital raise was a struggle, because it kind of always is. You're always like trying to get last minute. Investors drop out at the last minute. That has happened to us before.
Yep.
And that gets stressful. We've always pulled it off most of the time. But long story short, I think clear communication and doing the right thing can take you really far.
Absolutely.
And it sounds like, you've taken a loss. I've taken a loss during the capital raise. I wanted to ask this, something that you mentioned about Fractional that I really like. If I'm presenting to capital raise and I'm presenting the deal, as soon as someone clicks basically soft commit, right, through your app, they see all the deal details, photos, everything in there. As soon as they put, hey, I want to do this deal for $50,000 or whatever the number is, they're already committed by making a deposit in there. Not for the whole 50, but saying, hey, I'm going to make a small deposit that I'm committed. So that's pretty attractive to an operator, because it's like, ooh, I can actually count on that person, right? How has that affected the business? I mean, mostly in a positive way. I mean, as an operator, I think that would put me at ease. So where did you come up with that idea? Because it's pretty genius, where most syndication and funds, they don't do anything like that.
Right. Well, I mean, you've been through this too, and I certainly have, and pretty much every operator that has raised capital has, right, is verbal commitments, they don't mean shit, right? People will tell you anything. They're like, yeah, count me in, this number, blah, blah. And then, when it's time to send the wire, you got 25%, 50% of your investors just fall off the face of the earth, right? Like you have no idea where they are. They're just ghosting you. They flake. And that happens every single raise, right? And that sucks for the operator because usually by then it's super last minute, right? So usually people are always thinking, I've got to raise pretty much 150% of what we need, right? So we really thought about that, and just, how traditional real estate works is a seller, asks for an EMD, right? You can't just sign a contract and be like, okay, sell me this house, right? It's like you got to put, you got to have some skin in the game, right? So we were like, why doesn't this concept exist for raising capital, right? If you say you're in, you should have no problem, leaving a 3% deposit, right? It's not a extremely high amount where I'm just, taking your funds and letting it sit before we deploy, but I want to make sure you are actually committed, right? And that is definitely been a really great investor psychology shift, because when they click that button, they know, like, I am dead serious. I am investing. I'm going to let that operator know. This lets Fractional know that I am committed. And they know that if they flake out of it, they're not going to get that 3% back. So that's really helped people know that when someone does click that button, they are sold, and they're going to be part of the vision with you.
And I personally think that's one of the most genius parts of the app. I mean, there's several great things about it. But as an operator, I want the soft commit, which soft commit with money on the table, not just soft commit, hey, I'm in. Because a lot of times when you're raising capital that new operators don't realize, we're raising capital 3 months out. So as soon as I put a deal under contract, which I'm hoping to have a new contract in January, right? I was talking to my broker today. I'm like, I want to put one or two pieces of land under contract in the first quarter. As soon as that goes under contract, within 2 weeks, I'm already putting an email out just to put warm feelers out. And I'm going to start raising capital, even if we don't close for 5 to 6 months on land. That's what we typically do. I'm not raising right now asking them for money, but I'm asking for soft commitments based on the deal. And I would much rather, be able for them to click a button and deposit 3% of whatever total amount they have, because they're more pot committed. The other thing I find is, as a capital raiser, you may pitch them a deal in January and you don't need the money till March, and then they get pitched another deal in February that, whether it's a better deal or not, they like it better. Or maybe that operator's projecting way over what they'll actually get, because I see a lot of that in the space where we're very conservative. Our returns are still really good. But it's people play different games in a sense. But I know for me, I'm really attracted to this idea, because in January, when I'm hosting a webinar and I'm getting people warmed up saying, hey, we're going to be closing in April, like, I don't necessarily want their money in January, because then it sits in a bank account. That would be one strategy, but you found a better strategy of just, hey, commit 3%, you're committed to the deal, or you lose your 3%. That's going to keep people, that small amount of money is going to keep people targeted to my deal. So I commend you on that. Why do you think creators and operators are now raising more capital than traditional finance people?
I think it's all about relationships and trust, right? And creators, they've been able to build such a great relationship, right, with everyone that follows them on social media. If they run a community, right, there is just so much love and energy and all of that. And trust is the most fundamental layer, right, when it comes to capital raising. It's not really about the deal. It's not about the projected returns or whatever, right? It's really about, who am I working with, and are they going to be someone that is going to be true to their word. If problems come up, they're going to problem solve, and you can navigate the good, bad, and ugly with that person. And I think creators, just over time, right, with all the different aspects of how they do business, who they are as a person, what is their life like, right? They've been able to just build those really genuine relationships with their audience and people around them, where once they have an idea or a vision that they want to create and need to find backers for it, their entire audience is so madly in love with who they are as a person and everything about them that they want to jump in and back that. And I've seen people really take that into their hands to really create such a collaborative experience where you can bring in people that really support and love you to be along the ride with you.
Yeah, you explained it well. And it's something that I kind of learned recently as a creator. You get to follow the creator's life. I've been following Investor Grow Brett. I've been following Pace Morby for a long time, and you get to follow along with their life. One thing that I've taken from Pace and a couple other creators, because I'm a family man, I have 2 young kids. For a while, I didn't post much about the family because I wanted some privacy, and some of that is understood. And some people don't post their kids at all that I know, but they're not necessarily in the real estate space. They have a different business. But now that I have posted more about the family on family trips or family photos and the kids, the more I do that, the more phone calls I actually get or messages from people. And some of my messages through the podcast or posting is probably because I'm more dedicated to my kids now and freeing up some of my time. I'm getting people that connect with me better. So when I get a phone call and someone says, hey, I'm actually really connecting with your content, I saw a little bit of a shift, not just hustle and go get it. Like, hey, you're working hard for your family and your kids. So it's kind of my new content angle in a sense that I want to lean more into as a family man, as a father. Hey, if you want more for your kids, stay disciplined and sacrifice and save a little money, but also invest it. So you get to follow along a creator's path. And like you said, you get to understand them through challenges and hard times. Like right now, I've got like a plumber. My brother is at my house with a main water leak on the main at my house. And I'm still here doing the podcast because it matters. But so I've got so many problems. I got a roof leak at one of my vacation rentals. And it's just like, that's being a real estate investor. And I want to kind of document that. So I think when I go home in an hour, I'm going to go, look, we still have the same normal problems I've got, but you get to know the creator. Whereas a normal finance person, even if they're doing content, it's usually typically just, hey, this is what rates are doing. This is what we see on macroeconomics. And that's great, but it does get boring, wouldn't you say?
It just doesn't feel real, right? Because people invest with people, right? That is ultimately the crux of it that people have to understand, right? When you post family content and why you are working so hard and investing, people see themselves in you, right? They're like, I have a family. I want my money to work smart for me so that I can do all these other things, right? And they see themselves in you, and that makes the relationship so much stronger. And I think being vulnerable about things that are going wrong, that is also so powerful. I'm an active investor myself. I also, do business and invest in other people's deals. And one of the questions that I always ask is, tell me about a deal that went wrong. And if you can't, just lay it all out and explain what happened, I'm like, you're not real. Mm-hmm. Like you're just not a real person. Real estate is real. Every investor gets that things don't happen as expected. And I want to see that you're going to, just stick it through and problem solve so that, for whatever deal that we're considering going in together, I want to know that if something goes bad, we can figure it out together rather than, everything is just la la land and rainbows, right? And, nothing's ever gone wrong in my life. Like that is not relatable. That is not real. It actually takes away that trust.
Yeah, I agree. Every deal I've ever done has had problems. Some are smaller, some are bigger. I mean, one of my bigger ones was a homeless man broke into a fourplex that we were in the middle of the remodel and burned it down. That's a pretty big problem when you get called from the fire department that your house is basically not to the ground, but the whole thing was burned out. We just did HVAC, electrical. We had to deal with insurance and hire attorneys. We ended up paying out our investor with their profit and taking the loss as partners. Every single deal, there are difficulties, including my developments. There's frustrations. If someone has just only good deals and they haven't had problems, or an operator doesn't tell you about those, they're either lying or they're so lucky and they're going to get slapped in the face when they have real problems. I think good operators tell investors, like you're saying, they tell investors. I mean, I lost $1 million last year on a couple bad deals. I refunded the investors' money. I might not be able to do that in the future because some of mine were just private debt notes and things, but I took the loss personally. But that says a lot about, in the beginning, I didn't want to tell people, hey, I lost $1 million. That's a lot of money. It was all my money for many years. And my team was like, dude, you're so smart now and you're so far ahead. You're going to make that $1 million in 1 year. So just keep going. But for me to be able to sleep at night, I returned the money for 3 investors that had money in that. And I can sleep better at night. But it was a big problem, and I'll never have those problems again because it's like I don't do private debt anymore, especially second position. It was a little more risky, but I had also made a lot of money doing it.
Yep.
One of my friends, he's a big creator. He called me just 2 days ago. Hey, you still doing some of those private notes? I need 400 grand. I'll pay you a lot of money in return. I said, number one, no, because all my money's invested. Number two, I'm not going to do those ever again, even with someone I know. It's just not worth it, because I can't afford to lose another one like that. It already set me back. But I think operators need to communicate when they have problems. And for me, it's like, I'm probably going to do a solo podcast describing how I got in that scenario and why it was so successful before. But then really it's investors that screwed me over. They weren't deals. It was loaning money with investors that they screwed me, In your opinion, what makes someone investable today? Is it good deals, good brand, good story, clean track record, or all of the above?
I say it goes back to the person. You can have a great deal, and if it's operated by a bad person who can't problem solve or, has bad ethics and morals, that can go down the drain too. So I always bet on the jockey rather than the horse. And, all the things we talked about, right? How did they navigate hardships? And what you did, right? Even when you went through hardships, you said, I'm still going to protect all of you people who believed me and invested. I'm going to take the personal hit, but still make sure that you guys, have a win. That is freaking powerful, right? So for me, that is, I think, what makes anything investable. It is really the person standing behind it and how they work and how, they want to bring impact to their investors.
Yeah, I agree with you. And I think it's something like, it's hard to portray in content or whatever besides a longer form podcast. And then some people that may not know me think, oh, he's a risky investor. It's like, well, not really. These deals were really good. I'd already done a whole bunch. One of the deals I did, the guys owe me $300,000 still to this day. I had done 10 deals with them. They just kind of got caught with their pants down, over leveraged, and then they walked away from properties that I was holding notes on that the bank took back. So, and legal battles aren't fun. I have a call with an attorney on Monday, and I'm just forking out thousands to try and get judgments to someday get paid. But long story short, I think in the beginning I was afraid to talk about losses and failures, and now it's kind of what's building me up.
Yeah.
So I think more operators should talk about them and what they learned from them. Not, hey, I lost $1 million. This is how, and this is what I learned, and this is what I changed in the future. I know for me, I like controlling the deal. So I don't think I invest in anybody's full deal unless I have GP, basically meaning I have a general partner vote. And that's really important to me because even if there are smart people out here that we all know a little bit of different things or we have different strengths. And sometimes my hotel partner is a genius in running hotels, but he's younger and I have a lot more years on this planet in finance. So he'll come with us to an idea of spending money. Hey, then we can make money this way. Hey, it's a great idea, but not yet. Let's do this in 6 months, come back. Let's improve the revenue. Then we can pay for that. And then he sat back and said, okay, that is a good idea. I got it. But even as an operator for myself, you can get excited and go, we should do this because it's going to generate revenue. But sometimes it's good also having a team kind of, whether they agree or not, say, okay, well, here's a couple counterpoints to your deal. And I accept that now as a CEO with my partners. So for a founder launching for their very first raise on your platform, what does a successful launch look like from day one to close?
I would think about capital raising just like running a sales process, right? You could get lucky and, do one Zoom call and raise $1 million, but you can get lucky once. It's not going to happen consistently, right? So I always think about things like, it's just like sales, right? You give the initial pitch, you get people hyped up, but you keep marketing what your product is, what your club is, and then for anyone that expresses interest, right, you're following up. And this is a stat that we recently looked at for all the successful capital raisers that we've seen on the platform is you generally are following up, on average 5 to 6 times on an investor before they commit. And I think a lot of times operators have this psychology like, if I called them once and they haven't sent me the check, maybe they're not interested or whatever, right? That is not the case. I mean, everyone is busy with their lives, right? They've got work, they've got family, all that. And, your deal is not, number one priority on their list, right? That doesn't mean they're not interested and they don't want to build their wealth with you. It's just life is happening. So you've got to, chase the checks, right? You've got to follow up, make sure people convert, tell people updates. And FOMO is a huge thing, right? Like you need to bring FOMO and urgency into your raise, because the longer your raise drags out, it's just like a Zillow listing, right? If your house is on the market for 90 days, I'm like, something is wrong with that house, right? There's gotta be. So you have to really capture that initial momentum and that launch. It's like, I'm launching on this date. I'm gonna close this out in 30 days. And we're going to tell everyone when the first check comes in, who are the people that are investing, highlighting that they're, really smart, savvy investors, because guess what? Everyone's looking, right? They're seeing, oh my gosh, Sally invested. And I know Sally is, really savvy when it comes to, financial investments, right? Why does she join in? Now that's piqued my curiosity. Now I'm going to take an extra look. And then the next day I see you're saying, we're 50% subscribed. I'm like, oh my gosh, it's only been a day and it's already jumped up so much, right? That really creates that excitement. It's going to move the needle so much faster. So you got to just step on the gas and just go for 30 days and close it out.
Yeah. As a founder, how did people validate your product market fit? What was the moment you knew, like, hey, people actually need this and it's validating?
Yeah, so when we first started out, I am generally a risk-averse person. So I wasn't like, we got this idea, let me go quit my job and just build Fractional, right? That was not the approach that I took. I wanted to make sure that this was actually something that people wanted. So what my co-founder Carlos and I did was we built this fake website basically explaining, this idea that anyone doesn't have to be accredited, just anyone can invest in real estate with operators that they really believe in, with even as little as 10K. And we put it out on the internet to this app called Blind, which is a lot of where, tech professionals are anonymously gossiping about their employers. But we were like, professionals are the people that have, disposable income and want to find a way to build wealth, right? So we launched this fake website where none of the product existed. It was pretty much just the landing page, dropped it in Blind, and we ended up having 2,000 people sign up on the wait list for something that didn't really even exist yet. And when we saw that, we were like, holy shit, like we are definitely onto something. It's not just a me problem. This is a problem that, tens of thousands of operators face, and, hundreds of thousands of investors just out there want access to, because they need a scalable and accessible way of growing their capital with people that they trust.
Yeah, a big thing that listeners need to know about your app is the fact that it's not just a capital raising app. It's a place that's matching and linking some investors with operators, and then also with legal documents. So it's not just a single app. It is solving a problem, but it's solving problems for multiple different people, right? What has been the biggest growing pain? Technical scaling, user education, compliance, or just getting people to trust the new model?
I think trusting the new model is a big one. And I would say the second is really from a product perspective, right? Because there are two audiences. Our primary customer is obviously the operators that are raising capital, right? Making sure they are launching and running these investment clubs compliantly and making sure it's not, accidentally becoming a security or anything like that, in which case, people would be in big trouble, right? So that is one side of it. But then you've also got the other side, which is these operators are bringing in their network of investors who are now joining the clubs, participating, understanding, voting, and we do a lot of back office stuff too. So we automate profit distributions, we're filing taxes for the club, creating K1s for every single investor. So that is also the other side of the table, right? That we're, servicing and making sure people are getting the support and the right product experience and customer experience that makes sense. So it's been really interesting, building and designing a product that faces two completely different audiences. And, we've even had to change our website so many times. It's like, who should we primarily speak to? But at the same time, you can't not explain how it works to the end investor, right? So that is always a constant iteration of how do you really mesh everything just so cohesively together.
Mm-hmm. Part of I like what you're talking about because I have that similar challenge too. But I guess for your business, in my mind, I would be writing kind of what I just spoke about. We're here to bring operators and investors together to protect both, but so that they can create opportunities for investor clubs. Really, you're opening opportunity for people that are unaccredited at any level. And it's really up to the club owner, the club leader, I guess you will, to determine the lowest amount of money they'll take. Do you have clubs that do like $1,000 minimum for an investment, or what's the lowest that you see right now?
The lowest we have on the platform is $10,000. And the reason why we decided that is at the end of the day, the idea of a club is around ownership, right? So you have to have some baseline of ownership to truly be someone that is actively making decisions with everyone else in the club, right? If you're only investing $1,000, $500, whatever it is, like that is not real money, right? Mm-hmm. Like you might be putting in a very small check and then, you're checked out, right? For the club, you're not participating. That first of all brings compliance issues, right? Because active participation is required. And two, I think a lot of times when investors are not actually vested in the outcome of the investment, they don't know what's going on. And then a year later, they're bombarding you with all sorts of basic questions. And, as the end operator, that is really painful because it's like, dude, I've been sending you investor updates every single month. We've been hosting Zoom calls. There's been these votes going on. Like, where have you been, right? Like, we don't want to have that experience. It just doesn't make sense for people who aren't bought in. So what we truly believe in is, as the operator, you find out from your network, what do you think is really that minimum check size, right? Where people really do feel bought in to this investment and they're going to be engaged and they care about the outcome. And that just creates a much more collaborative and productive experience for everyone.
Yeah, it completely makes sense. If someone's putting 10,000 on the line compared to one is not as big of a loss, right? So I like that. That's good explanation. What's the biggest mistake founders make when they try to raise capital too early, too fast, or with the wrong structure?
Yeah, that's a great question. So, I think there are so many structures with capital raising, and I always say this. Being a successful founder is all about knowing the tools you have and which tool is going to bring you the most leverage for a specific problem. So, I never, say that syndications or funds are bad, right? There are definitely cases, let's say you're raising $10 million, right? Where it would actually make way more sense to use a traditional method because at that point, you likely are raising money from institutional investors where they probably, wouldn't really care to vote, right? They want to be truly passive, in which case the traditional method would work better. So I think it is so powerful to understand, in which cases it makes sense to use what. With an investment club, it's usually what we see is people raising $5 million or less. They can benefit from doing a lot of marketing. They have a network of a wide variety of people that, really believe in them and want to do deals with them. And you want to unlock, both accredited and unaccredited. And, something that I think was really interesting was with, Investor Girl Brits Club. They originally had a hotel deal that they did a 506c for. They had investors submit deposits, all of that. And then that deal fell apart. during due diligence. And they were thinking, okay, well, now this 506C we set up for this specific hotel, it no longer works, right? Like the paperwork is for something that doesn't exist anymore. Do we just send investors their funds back? But all these people really want to do hotels with us. And right around then, hotel number 2 comes up and it's urgent. And they're like, okay, do we go spin up another 506C? What if hotel number 2 also falls apart during due diligence? Then we got to go start another 506C for hotel number 3, right? Like, when is this cycle going to end? And that's when they looked in and said, well, with the investment club model, we can have all the investors who believe in hotel investing just come in because they're believers of the criteria. They'll pool their money together just for the criteria. And then we'll just deploy the capital on whatever deal makes sense. If that deal falls apart, that's okay. The club is still staying together, right? Because they believe in investing in hotels. Then they'll just vote on the 3rd deal, the 5th deal, whatever ultimately ends up working out, right? So I thought that was just so powerful for them as a founder to make, because they truly understand the pros and cons of each legal structure, of each strategy, and they know, right, when to turn up the lever for what specific structure based off of the problems and use cases that they're seeing.
Yeah, it makes sense. I like that it's a little bit flexible, where I've done the same, where you pay, $10,000 or $20,000 for legal docs, and then the deal goes south. And then you got to pay again for the next set of docs. I've negotiated with my attorneys before where, we paid $20,000 for our first set because it was a lot on them. And then the second set were $10,000. It's still a lot of money. But they're like, hey, we can just, make some small changes, same asset class, like all the same, different address, couple different things, but it's still very expensive to do legal docs. And sometimes investors don't know that, where we have a $50,000 minimum when we're doing a 506C. And there's also like blue state filings and all this. We have a lot of expense on the back end that costs when we bring a new investor in. Sometimes I'll have investors come in. Some of them are my friends. They're like, hey, I'd like to just start with 25. I know you, this and that. And I'm like, hey, like, I get it. And I really fight a little bit with my CFO. We bang heads a little just because he's got a big finance background. He's like, hey, our minimum should be 100,000. Like, let's just deal with less people, more educated. People just have a little bit more money. And I go, hey, that's great. But also why I got into real estate is help people actually make some generational wealth. So I keep it right at 50 and I'm good with that, and I definitely have conversations with people that they're very wealthy and 50,000 is like no big deal. They're sitting on 10 or 20 million in the bank.
Yep.
But why they come in for 50 on my first couple deals, they're kind of testing me, even though they know me. Let's see how he runs it. Let's see how he updates. And then hopefully in the next couple of years, I'll be getting $1 million checks, but also for the people that are making $200,000 a year that just barely qualify for accredited, They put in 50 to one of my deals, and then, we're returning whatever, about 20% a year right now projected. So now it just keeps going up. So if I can return them 75,000 in 2 years, and then boom, they reinvest in the next deal. So I think there's something about, dedicating to people that don't have the bigger checks. There are plenty of people in our mastermind that are just only doing business with people that are worth 10,000 or 10 million or more.
Yep.
And Brady's a good friend of mine, but he has 300 deals under his belt. He's not dealing with people. He doesn't want to raise capital. You know why? He doesn't need to. His partners, they're doing all the funding with one big family. That's it. But that's someone that's done 300 deals in real estate. So I like the idea of helping people out. So I love the idea of your club. So we can get people involved with $10,000 that are not accredited. Maybe they're making $80,000 a year and they saved up $10,000, which is hard to do. I've been there. And we want to make sure they can grow wealth as well. You're a woman building a company in a space traditionally dominated by men. What unique challenge or advantage has that given you?
That's such a great question. And I really see it as an advantage, because I think to make a difference, you have to stand out. So, if you are confident in who you are and what you're building, and you are not the common scenario, right, in a room, then that is such an advantage, right? It is such a great way to just lean into that and use that as a way where you just become different. And it's so obvious and it's so easy to just shine, right? Because you are different, you're proud of that, you're confident about that, and that has, really worked wonders. And I really tell people, especially a lot of, female entrepreneurs, female builders who have imposter syndrome is, that is all in your head, because if you look at people around you, there are so many people who, really aspire to be you, right? Like they are seeing themselves in you and wanting to become who you are. So a lot of it, I think, really just comes from a lot of self-reflection and awareness that everything is a double-edged sword, right? It really just depends on how you look at it and how you want to use that. Similar to any sort of pain, right? If you lean into the pain, you can use that massive pain to create an absolute monster of a business, which is what I did with Fractional. And I use that the same way when, I'm usually the youngest person in the room, or I'm the only female in the room. Well, that's okay. Well, now life has made it even easier for me to stand out in the room, because if I'm strong, if I'm confident, people will see that and it will turn heads.
Yeah, I completely agree. And I think as someone that does business with males and females, there's a lot of female founders that I would call kind of geniuses, and they appease to both male and female. There's female founders like, Kylie Jenner, or Jesse Itzler's wife, I think it's Blake Lively, that did Spanx. I mean, those are female products mostly, so I don't know much about their business, but I can respect them as an entrepreneur and someone that overcame a lot. But your business, you and another one that rings a bell is Bumble, the dating app. I was on there when I was single. Whitney, her founder story is very, very unique, because she was actually at Tinder, went through some legal things and said, all right, I'm going to start my own and be in charge. She created Bumble so that the women had more power on the dating app. And that's genius to me. I think when I was dating, that app was more powerful anyway, because the women had the control. So for me as a man, I knew like, well, okay, cool. If the woman messaged me, she actually had the control. So there's more interest there, rather than as a guy trying to message girls or whatever. I know it's kind of a funny thing, but it's a founder that has a unique product, and your product will serve both men and women. But I think you being a female founder for this product will encourage women that are, number one, in our mastermind. There's a few there that are so smart, but they don't want to put themselves out there. Renee Ford's one of them. She's great. And Brandon's making her do content, and she's like, I hate it, this and that. I'm now sending her videos from even my podcast when I have content creators on. And she's loving it, because I'm like, look, I was terrible when I started. And it's not that I'm a pro, but you got to put yourself out there. So I love your product, but also that you're a female. I think it's great. And I think because you're smart, the product and all those things, I think it's to an advantage. Because you can win the men over, like myself, in a sense. It's I don't care if you're male or female, but you need to know what you're talking about, and then teach me some things, right? So I think you got such a great thing, and you're inspiration to women too.
And just have fun with it. I think people don't realize that when you lean in and you have fun with it, people can see that, and they love that, right? Regardless of gender or anything. And because you're having fun, it makes you more authentic, it makes you more confident, and that's the energy that really brings people that are doers and action takers to do business with you.
I completely agree, and it's something, I think it comes down to confidence. You become more likable, and people want to do business with who they know, like, and trust. Those are the three key elements of raising capital, doing business, or growing a company. It's literally the same. So, what do you want more women to understand about raising capital, especially those who feel underqualified or intimidated by it?
Yeah, that's such a great question. And, I would say, going back to the know, like, and trust aspect, right? Who you end up having as your investors, those people invest in you because you are someone that they relate to and someone that they aspire to be, right? So if you are an action taker and you've been operating your business, and I think everyone feels intimidated in certain situations, right? Just even being super vulnerable and talking about those things, that is extremely relatable, right? And that ends up building that trust where, if I was, an operator that has went through extreme hardship, maybe I, am a single mom and I'm figuring out how to, operate multifamily, whatever it is, right? Like, don't be scared to tell that story, because there's going to be so many people around you that, are going through similar things. And when they see that, that is your life experience and how you've been able to take that into building your business, that will naturally draw them in, right? Because they relate to you on so much of a deeper level that's just, beyond transactional, beyond investing in any of those things. That makes you so much more likable as a person, right? And you're like, I want to be in this rocket ship with this woman that I'm seeing, and I want to help them. I want to be with them to create greatness together. And I think people don't realize just how powerful being vulnerable is, and just leaning into a lot of the things that you're feeling, whether you feel small, you feel intimidated, you feel uncomfortable. Being able to share that will make you be more and more confident and comfortable and attract other people who feel empowered by you breaking the ceiling.
And I think it's kind of like finding the inner you for anybody. The more fun you have, and I agree with that 100%, whether it's a woman or a man, right? It's like, if you love what you're doing, prove it and talk about it like that. Like, I love building real estate. It may sound funny to a lot of people, like there's boring, maybe tech is a little bit boring or over my head, but the people doing it, if you love it, then let it shine. And then that's how you attract people and grow your business. Couple last questions before we wrap it up. Is traditional capital raising outdated? And do you think platforms like yours will replace the old model entirely?
That's such a great question. I do think it's outdated, and I do think there is a gap in traditional fundraising that doesn't serve the up and coming operators. And that's really where, we see Fractional really come in and fill that hole, because, if you're raising capital for the first time, or for the first 20 times, the first 100 times, right? Depending on the raise amount, you're still in that place where you are leaning in, building your network, building your brand, and that marketing piece, and taking people along the ride, and all the storytelling that you can do around it, that is just irreplaceable and so needed in eventually growing your career as a capital raiser, where, maybe you do become a fund manager in the future, right? But you've got to start somewhere. No one starts out day one fund manager, right? It doesn't happen. There are these steps that you have to take. And I think being able to build and run successful investment clubs back to back, bring really great investors in where they get to witness their growth, working with you as part of their team, being in the same club together. Those case studies, those wins that you have, right? They're going to be exponential. So that's really where, we see ourselves creating so much impact. And I really think the brand and the storytelling is such a huge part of it, because, that's why all the top leaders are on Fractional, right? Is because they realize how much of the story and, the accessibility and them bring their community and their network along for the ride, just how far that can go. And it ends up really creating almost like a bit of an exclusive environment within Fractional where, similar to tech, right? It's like, if you want to be the dinosaur, sorry, you might not make it, after 10 years, right? Because you're not on the next cool thing. And that's really what we think we are, is, we're creating this brand new model for how people think about capital raising and ownership, and really bring their community along to build a rocket ship with them.
Yeah, I agree. I think you're definitely filling the gap. And my perspective on this is the old model won't be replaced. There's plenty of huge family offices that raise hundreds of millions of dollars, and that's not necessarily your club could do that, but you're limited on people. So I know family offices that have 3,000 investors and this and that is one big fund. But you are definitely filling the gap for new operators, but also for new people to be able to invest. So personally, I think they'll just be right alongside each other, which is also great because there's so much growth that you can have. So I commend you on that. I think it's such a great business. What keeps you up at night?
Oh, that's a great one. I mean, business growth is the number one priority for us. And the end vision that we had for Fractional is that people can start investment clubs and co-own any sort of asset class. So we started out with real estate just because there is such an obvious pain point here, and I'm a real estate investor myself. And we always had this vision where, what's stopping someone from owning businesses together? What if you're really into planes, right? You can start a pilots club, right, where a bunch of people own planes together, right? If that's something that you're passionate about. So that's really what keeps me up, is like thinking about how do we allow people to build all these different clubs for any idea that they're passionate about and have a audience that's passionate about the same things. How do we make that happen? And the thing that we've been able to unlock very recently is with business acquisitions, and it's been so crazy to witness like what people have been doing. We've had a lady, Tracy, open up a candy store club where they're going out and buying candy stores in North Carolina and like bring kids over to host like game nights, reading, all that kind of stuff. And I'm like, wow, that is so fascinating that, people have such brilliant ideas, and I really want to, make that come to life. So that's really the next big thing that I have my brains just constantly churning about is, how do we make this a reality?
Yeah, that's a founder, right? Laying in bed, trying to go to sleep and turn off the brain. It's very, very hard to. I hear you there. What's one book that has changed your life that you think listeners should read?
I love The Power of Habit. That is one of my favorite books. And it really takes such a logical and strategic approach on how you develop habits as a human. And I think, beyond physical habits, there are mental habits that really shape who you become as a person and the amount of impact that you're able to bring, right? Like we talked a lot about fear, people overcoming, imposter syndrome and feeling intimidated, or, even feeling like you're being absolutely crushed by maybe the biggest hardship that you've experienced. That is tied to a mental habit, in my opinion, on how you process those things and how you are able to bounce right back up and be stronger, or how do you, really internalize the demons that you're dealing with, right? And with entrepreneurship, it is constantly a roller coaster. And I remember when I was first starting out as a founder, I would experience every moment of high and low. It was like if something great happened, I was so freaking happy. And if something bad happened, I was so down. And it would just, drag me in my work, and I couldn't focus, and all of those things. And it made me realize that, I had all these mental habits of how I approach these situations. So, you can really kind of wire your own brain and how you think about what are the natural things you do in your head when something happens. And the moment you realize that, you can design how you actually want your brain to process these and really build mental habits that I think make you really dangerous.
I haven't read that book, so I'm going to have to put that on my list. That's a great suggestion. Final question. How do you want to be remembered?
Oh, I want to be remembered as someone that has really leaned in to who I am as a person. And I use that to the best of my ability to keep building myself up, building everyone around me up, and delivering impact. I am a very impact-driven person, and just seeing that, I can define my own destiny and help shape the world, that's really what drives me and what I want to be remembered for.
And that's powerful. I think you're well on your way with your app and business and your attitude and people that surround you. So I commend you for that. Well, thanks so much for your time. It was a power-packed hour of an episode with so much on the table. If you guys are investors or operators out there or you're looking to invest, where can people get a hold of you? Where's the best place to get a hold of you? And if you could let them know your website, we'll throw everything in the show notes. But where's the best place for people to get in touch with you?
Yeah, well, I am always lurking around on Fractional, even to just find the best clubs myself, because I'm always actively investing. So fractional.app, I am always there. And then on socials, I am Hella Stella on Instagram, keeping it California for everyone. So reach out to me there.
All right. Well, thanks so much for your time, and hope you guys enjoy this episode. We'll see you on the next one.